Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science in my opinion. The best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, buying dividend growth stocks, and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio every week, and that's what this video is. A portfolio update covering all of the plays in my portfolio this week, options that we're running, buys that we're making, any sells that we have. I did not make any sells recently, but I would cover that if I did. We did add $3,325 into the portfolio, and I cover that every Sunday. So if you want to watch a portfolio be built out week to week, hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, what we're investing in, tips and tricks we've learned along the way. We cannot benefit from each other's investing, but we can certainly benefit from each other's investing knowledge that we may have learned over the time. So again, if you are interested in that, hit that notification bell down below. Drop a comment. Let me know what you invested in this week. A lot of companies are pulling back right now, so a lot of opportunities in the market. Let's jump right in here and see what activity was going on in my portfolio this week. And first up, we will start with options. On October 16th, I threw a couple more options. Actually, I threw out more than just these two, but these are the two that hit. So on the 16th, we sold to open a NextEra Energy put. And last week, if you remember, if you're following along, you saw that I was running a covered call on NextEra Energy, 2 contracts, and I was assigned 200 shares. Excuse me. And I mentioned in that one I would continue to run the wheel on 100 shares of NextEra Energy, and I would take the rest of those proceeds and divvy across the portfolio. And that is part of the reason why this week is higher than average investment, that $3,300 and some change. A lot of that came from those funds that was paid out on that covered call last week. But again, so we ran this wheel on NextEra Energy. We were assigned with a October 20th date, a $55 strike price, and we received $164.46 in options premium. We also hit on the MPW cash secured put here, 1 contract with a $5 strike price, same date, expiration date of October 20th, and we received $25.46. And these both were assigned. So I picked up those 100 shares of NextEra Energy, which I always accounted for in the portfolio anyway. Even though we didn't technically hold those 100 shares, we accounted for it because we knew we were going to run this wheel and we're going to get those, or thought we might get those shares assigned again. So those are already accounted for. Now the MPW was assigned as well, so we picked up 100 more shares that was not accounted for, and you will see that here. And all total, we added $189.92 in cash, and part of that, majority of that, was reinvested this week as well. And this is a way, these covered calls and cash secured puts is a way where I'm kind of getting a little bit more capital to invest into the portfolio, especially right now when stocks are down and seem to be pulling back. I want to try to put as much into the portfolio, bring down my cost basis, bring up my future returns, and bring up that dividend yield. That is really nice to see. A lot of companies pulled back, a lot of high yield right now. So I want to put as much capital into this. So I'm going to continue to run cash secured puts and covered calls while the market's pulled back. Even whenever the market starts to run up a little bit, it just makes it harder whenever the market is pulling back significantly or running up significantly. Some of these don't get assigned, but these are the two that we hit on this week. Again, $189.92 in cash added from the cash secured puts here. Now on to dividends paid out. We received some dividends also on October 16th from Nutrien, ticker NTR. This is out of the materials sector. This is actually another Canadian company that I own here, so I wanted to walk through how this plays out. We were paid $58.34 in dividends total. Now, my brokerage takes the taxes out right away. So $8.75 was taken out right away. And let's talk about taxes. So if you own foreign companies like this one, Nutrien, like I said, is a Canadian company, and I own another one out of Africa. I own one out of Brazil. I own a couple Enbridge is another one out of Canada, several foreign companies, and there's tax implications around those foreign businesses. Now, I saw a comment that they didn't like how the taxes are taken out right away. And if you don't like that, find a brokerage that doesn't do that. My brokerage, Ally Bank, is who I use for my brokerage as well as my regular bank account, savings, and checking. And I use it for my brokerage as well. They take the taxes out right away. And I know that it does limit, right? It takes out the $875, so that is not reinvested. But I'm going to pay these taxes anyway. It's coming out of my pocket regardless of whether they take it out in the front end or whether I pay it on the back end. And I am continuing to add to these positions as they pull back. So it's not like I'm just sitting on these positions, not adding anything to it. So I am not worried about the taxes taken out. I don't want to have to worry about this during tax time. I just want to be able to download my printout from my bank and hand it over to my tax lady, and she does all my taxes and makes it, makes everything square. So I won't have to pay these taxes later because they are already out, and that will give me more money to invest later because these taxes are already out. So whether I invest the money now or I invest the money later, all the extra funds I have for investing are going into my portfolio, into my brokerage account to invest. So it doesn't matter. The money's going to be the same in the end. It's going to be a wash. So I don't mind this. If you don't like the taxes taken out, you need to find a brokerage that does not do that. Mine just happens to do that. So I want to make sure to cover it so you understand why there's a difference between what I was paid, the $58.34, and what was reinvested. So all total, after the taxes were taken out, $49.59 goes back into Nutrien. We have the drip set, so whenever a company pays out dividends, it automatically goes back in and buys more shares of that company. So we picked up 0.81357 shares of Nutrien and added, with those 0.81357 new shares, added $1.72 in additional passive income over the next calendar year. Let's keep rolling here. Now we get into, and it says October 12th. Apologize for not changing the date. It was actually on the 16th. We had a lot of activity on the 16th. You saw those options hit. You saw the dividends paid out. Well, we made our first buy as well. We added $98.50 with that. With those funds, we picked up 20 shares of Medical Properties Trust, ticker MPW. This is a REIT. This one has really pulled back. You can see we were buying it under $5 here. And you also saw that we ran a cash secured put for $5 even on that one. So I really like this one. Very high yielder. They recently cut their dividends, so I'm not concerned with them cutting it again. I think that the sell-off on this one is way overblown right now. So if I can pick these shares up for around $5 or under, I am going to continue to do so. And that way, whenever they recover, I will have a very high yielder with a very low cost basis and hopefully very, very nice future return. It's worth the risk to me. May not be to you. It's just where I'm at with this one. So we picked up 20 more shares of Medical Properties Trust plus the 100 shares that we picked up when that cash secured put was assigned. Ticker MPW is a REIT out of the real estate sector, and those 20 shares added an additional $12 in passive income over the next year. And we weren't done. We added a significant amount. This is a lot of the money that was assigned last week out of that covered call for NextEra Energy, right? So we did add $3,226.64 on October 19th. And with those funds, we picked up 10 shares of Realty Income, ticker O, the monthly paying REIT, $49.86 per share. Another one that has really pulled back. I'm going to continue to add to this one. I like it anything under $60 per share, so I really love it under $50 per share. So we were able to get it just under 50, picked up those 10 shares. Very nice. I'm going to continue to add to this one, decrease my cost basis, increase my yield, and increase my future return on this one. Another one that has really, really pulled back. Cisco Corp, ticker SYY. This is out of the consumer staples sector. We picked up 10 shares at $65.60. This is one of the few positions in the portfolio that is actually running up right now. It hit a 52-week low here a few weeks back. I'm trying to build this out to 100 shares, so it's actually going in the wrong direction. I want this one to continue to stay low, but so long as it stays under the $70 or so per share, I'm going to continue to build this one out to at least 100 shares. Again, we picked up 10 more shares at $65.60. Pfizer, another one that has continued to pull back, and it's actually finished the week a little bit lower than this, but we added 10 more shares of PFE. This one is out of the healthcare sector at $31.06. We added 10 more shares to our Kraft Heinz position, ticker KHC. This is out of the consumer staples sector as well, $31.59. My cost basis on this one is around $38 and some change, so another one that I'd like to continue to nibble on. I'm getting close to 200 shares on this. I'll probably run it up to 200, maybe 220 shares and back off a little bit, but we're not quite there, and I'm going to take advantage of the pullback on this one. Haverty Furnitures is another recent addition to the portfolio. This one is the same thing as Cisco Corp. These are two of the most recent additions to the portfolio, and this one's headed in the wrong direction. We picked up 10 more shares of ticker HVT out of the consumer discretionary sector at $27.67, but it finished the week out above $28 per share, and I'd like to get this under $28 per share. I'd love to get it under 27 per share where I started picking it up, but again, it's starting to run up a little bit. Seeing some value in this one. I'd like to run this one up to at least 100 shares, if not more as well. But it's got to stay under $28.53, I believe, for me to do that. So right now, it's currently over that, but we picked up these shares under that. So hopefully we continue to add to this one, and it doesn't continue to run up. It pulls back a little bit like the rest of the positions in my portfolio. We added 4 more shares to Johnson & Johnson, ticker J&J, and I will tell you, this is a great milestone in my portfolio. I just hit 100 shares with these 4 shares added of ticker J&J out of the healthcare sector. That took me up to 100 shares, and we picked up those shares at $150.44. My cost basis is around $162, maybe a little bit under that. I don't know that I'm going to add any more. This is my largest position. It is almost 10%. We'll see it here in a little bit. It's almost 10%. I don't want any position to be over 10% of my portfolio, so I might nibble on this one if it stays in the low 150s. But right now, I'm at the 100 shares that I wanted to be in. I could add maybe 2 to 4 more here if it stayed down in this 152, 153 range. But it is getting to be a large position within my portfolio. And again, I kind of have a rule that I've set. I don't want any one position over 10% of my portfolio. And this one is pretty close to that. We added 10 more shares to our Enbridge position, ticker EMB. This is another one out of Canada. This is an energy company. Really has pulled back as well. Really love the dividend yield on this one, over 8%. So we added 10 more shares at $32.05. And last but certainly not least, Ally has pulled back, and this is the bank that I use, right? This is my brokerage account, my savings account, my checking account, my kids' custodial account, all in Ally Financial, ticker ALLY, out of the financial sector. And we picked up those 10 shares at $24.67. And all these new shares, this $3,226.64, added $152.09 in additional passive income over the next calendar year. Total invested $3,325.14. Total passive income with the dividends paid out, with all the new positions that we added, $165.81. Very, very nice addition this week with the new funds and the dividends paid out as well as the options. Very nice to see here. Now here is the sector weight allocations. Let's run through this real quick. Communications is sitting at 9.05% of the portfolio. Consumer discretionary at 0.87%. Consumer staples sitting at 6.62%. Energy makes up 6.86% of the overall portfolio. Financial sitting at 9.53%. Healthcare is the largest piece of the pie here, sitting at 18.29%. Industrial sitting at 8.15%. Technology sitting at 8.56%. Materials in second place, just ever so slightly above REITs, sitting at 13.97%. Utilities sitting at 5.08%. And REITs in real estate sitting in third place at 13.01%, even though the MPW addition did bring it up pretty close to in line with our materials position. Now, again, these ones are getting, healthcare, materials, and REITs and real estate are getting a little weighted, a little heavy on the weighted side. I'd like to build out the consumer discretionary sector. I'd like to build out consumer staples. Get these all close to 8-9%, even it out a little bit. But I don't mind these ones being overweight right now. I'm seeing a lot of value in those sectors right now. To be honest, I'm seeing a lot of value all over the market right now. A lot of pullbacks all over. It's really exciting to see. I'm really enjoying these pullbacks. The only problem is I don't have more capital to throw into the market. I wish I did. But we're going to continue to run those options plays. We're going to continue to add every week like we do. Hopefully you are doing the same. Again, don't freak out that you're seeing a lot of red in the market. These are buying opportunities. If you walk into a store and you see a sale, you don't run out the back door and say, oh my God, all this stuff is junk because it's on sale right now. No, you buy more of the stuff you were going to buy anyway whenever you walked in the store, and you should treat the stock market the same. If you've done your research, you're buying good companies, you've looked at the financials and nothing has changed with the business, you should be doubling down now, tripling down now. If you have cash on the side, this is the time you put it in the market. And if you happen to be running, cash secured puts, you could even increase the amount you have in the market because you'll get a little bit of money for those cash secured puts. That's what I'm doing right now. You can see here on the right, this is the portfolio sector weights broken down by percentage, like you see here in the pie chart, but also gives you the monetary amount in each position as well, how much in funds I have allocated to each position. As you can see, REITs and real estate 21,000, materials 23,000, and healthcare at 30. Everything else is around 10 to 15,000, consumer discretionary under 2. So I really want to add to this sector here. HVT and Williams and Sonoma are two that I really would like to add to. HVT I've been adding to, but it's starting to run up, and Williams and Sonoma just really skyrocketed after I started adding it to it. So I have not really added any there. I'm looking at a couple other positions or companies in this sector that I may be adding here to the portfolio shortly. Now here is what I show every week. I really want you to understand and see how a real portfolio is built out over time. Hopefully you can see that there's going to be red, there's going to be green. Don't freak out about that. That's part of the journey of investing, right? I grew up in a double wide trailer. If I can do it, you can do it. And I know that seeing the red and thinking you lost money, oh, I've lost money, this is terrible, I should sell everything. Don't freak out and sell. If you lock in these losses, then you have lost them. But I haven't lost a thing. Even though it's red here and says I'm in the negative, until I sell these are unrealized losses. It's just same thing as the green. Until I sell these in the green, they're unrealized gains. It doesn't mean anything. Only when you buy or sell do you actually see a gain or a loss, or actually when you sell, do you see a gain or a loss, right? That is when you actually lock in the profits or lock in the losses when you make the sale. So don't freak out. I believe all these companies are going to come back over time, and I'm going to continue to add to them over time, decrease my cost basis, increase my yield, and increase my future returns. Here is the tickers, right? All the companies within the portfolio, how many total shares I have, the current price, the market value as of the close of business on Friday, my average cost per share, my purchase price, how much I have into each position, my total return, whether I'm up or down, you can see it here. The percentage, whether I'm up or down, you can see it here. Obviously, the red means I'm in the negative. The green means I'm in the positive. What sector the companies fall in, whether they're a quarterly, monthly, or semi-annual payer. Their current dividend yield as of the close of business on Friday. My yield on cost. You saw in the previous slide the sector weightings. You can see the weightings by each position in this column. Estimate, and let's look at Johnson & Johnson real quick. Like I was saying here, you can see Johnson & Johnson, we just hit 100 shares, 100.682 shares here. My cost basis is 162.05, so I'd like to continue to add to it. It was actually, I got it at 150, in the 150 range for those 4 shares. At the end of the week, it was at 152, so I was lucky to get those below that cost basis there. But I'd love to continue to add this, but you can see it is 9.21% of my portfolio. So if I add, it won't be very much. I do not want any one position to be over 10% of the portfolio, and this is getting pretty close to that mark. So we might add a little bit more, but we aren't going to be adding much to J&J. Portfolio weighting, estimated annual income in this column, what months they pay out, the dividend growth over the last year, you can see that here, and where they sit at 15% of the 52-week low. Let's talk about this one here. This kind of gives me a high mark, what I'm willing to pay, or if I am looking at a company to add to the portfolio, where I am willing to start out at. So if you look, let's look at HVT, right? We're adding to this one. We'd like to get this to 100 shares. My cost basis is $27.89. But if you look over here, the 15% of the 52-week low, I am willing to buy it so long as it stays below $28.59. So currently it is at $28.47, right up against that. I would not pay much more than this, but so long as it stays under this $28.59, I will continue to build this out even though it is over my cost basis, right? So it not necessarily is a hard and fast rule either. You know, if it was $29 and that didn't break my cost basis over $28.59, I might continue to add. But for the most part, I want to be buying when it's 15% of a 52-week low or lower or below my cost basis. That is the idea here. So total shares, I'm sitting on 5,360.842 shares. Market value of the portfolio is $167,265.10. What I have into the portfolio is $182,452.62. I am down $15,187.52, but I'm only down that 15,000 and some change if I sell all these positions. So this doesn't mean anything. If you remember, or if you've been watching the channel for the last couple months, here 3 months ago, I was actually up by 4%, right? So now I'm in the red, but just like the up 4% didn't mean anything, being down 8%, 8.32% doesn't mean anything unless I sell the shares in the portfolio. Current dividend yield of the portfolio as of the close of business, 5.07. My yield on cost, 4.59. So this is creeping back up towards 5%, and that's what I like. Now that these positions are all in the red that I'm continuing to add to, it is increasing my cost basis. We'll probably be in the 4.6 range next week, but this is what it's really all about. This is what I'm focused on. The passive income provided by the positions within the portfolio, the dividends paid out over time, free cash flow here, hitting a new record, $8,375.02, and this continues to grow week over week, month over month, quarter over quarter, year over year, whether the market's up, whether the market's down, whether the market is floating sideways, doesn't matter. While I'm adding new capital into the portfolio, while the positions in the portfolio, like Nutrien did this week, pays out dividends and buys more shares of Nutrien, and while we're running the cash secured puts and covered calls, adding new capital to buy more shares as well. That is the dividend snowball in effect. That's starting to get bigger and bigger. You can see we're starting to build the base of that snowball, I'll call it. And again, $8,375.02. Very nice to see. And here's the dividend growth. If I was to stop adding the portfolio with the positions in the portfolio, paying out dividends should grow by 7.36% yearly. Well, that is it for this one. Let me know what you think of the video. What are you adding to your portfolio? Are you running any options? Are you running any covered calls? Are you running any cash secured puts? Are you selling anything, right? Are you avoiding investing in the market altogether? Let me know what you think down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I also run a Stock Pick of the Day series, so if you have a company that you'd like me to cover in the Stock Pick of the Day series, drop it down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you're investing in. Let me know if you are avoiding the market right now. Let me know what you're watching. Let me know if you've even started your investing journey. How much are you investing on a weekly basis? Would really love to hear from you. Again, drop it down in the comment section below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, gains money, so never invest any amount you're comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.